Hey y'all, your girl is back with another YouTube video. My name is Pranicia Petit and I am a day trader. Well, you know we dropping gems over here. Today's video, I'm going to walk out through exactly how I prepare for my trading week on Sundays. And I'm also going to be answering some of the questions that I get the most in my comments. These are questions that I've been seeing non-stop. And I added a couple extra ones in there as well, just because these are the type of questions that I had when I started, so I thought it'd be beneficial to share them. So if you're new to trading and you're trying to understand the charts a little bit better, or if you just want a realistic routine before starting the trading week, this video is for you. So let's just jump right into it, y'all. How I prepare for the week. Now, some of y'all might think that I trade on Sundays. I don't. Some people do. I'm not one of those people. I just wait for the regular trading week. I like to come in with fresh eyes, fresh vision. I keep my Sundays simple. I don't heavily mark up the charts. I don't like to overthink what I think is going to happen this week because the charts is a probability game, so who knows what's going to happen. And I also just don't like staring at the charts all day. Like, that can really drive you insane for real. I want fresh eyes for Monday because the market is clear when your mind is clear. Now, one thing I do on Sundays, I do look at my news for the week. So I'm checking things like the CPI news, PMI news, if Trump or anybody is speaking, because that will affect the markets heavily. These are things that can literally blow your account in seconds. So it's better that you check and you take that one extra step just to look it up and make sure nothing's going on that could possibly blow your account without you even knowing. And the website that I use for this and most people use for this is called forexfactory.com. This is going to show you all your news throughout the week, and it also shows you the different color folders of the news. So red folder is the most highest impact. Orange is like mid, and then yellow is little to no impact on the charts. So I'm really just looking for those orange and red folders, more red folders, because those are the ones that those are the ones that can blow your account in 1 second. Orange folders can too, but red folders, those don't miss. So I definitely want to be aware of what days those folders are happening and also what time, so I know when not to trade. This is just helping me get ahead of the game, so I know possibly if I'm going to even be taking a trade that day, or just I'll know if I hop right on the charts around 8, 8:30, 9, whatever, I know that there's going to be news playing around that time or whatever time. Now, I also like to review trades that I took this week. I go to TradingView because that's where I chart my trades. This is where that growth starts to begin and you can be able to reflect on how the week went. I look at my last week trades and I ask myself, what did I do well? What did I do wrong? Did I follow my rules? Hopefully I did. And what emotions came up during these trades. This is where my journal kind of slides in. Not only am I looking at the setups that I took, but I'm also reflecting back on my journal as well. And then I also kind of like to do a little top-down analysis as well on Sundays. So just looking at those higher time frames, looking how we closed those last days of the week. I wouldn't really say predicting because like I said, I don't do much on Sundays and I'm not trying to predict what's going to happen. Whatever happens, happens. But I do just like to see the overall story of what's been happening so that I can kind of have my head on the swivel when it comes to the week coming forward. And I guess it kind of helps me decide whether we might continue going up or we might continue going down. And then lastly, I like to reflect on my weekly goals as well. My weekly goals typically stay the same, but I just be having to give myself a little reminder so that I can stay on track. And those goals look like only taking A+ trades, not trading when I'm emotional, following my stop loss no matter what, no forcing trades, no chasing trades, and about 1 to 2 max trades per session. And really, I've been working on just trading once because y'all will learn trading gets real simple once you start to follow your rules. And what's simple becomes peaceful. Simple goals equal consistent results. So now that I kind of went over how my Sundays kind of look before a new trading week, I want to answer some questions that I've been getting a lot on my videos here on YouTube, on TikTok, and on Instagram. And it's kind of been a lot of the same questions because we're all beginners here. Hopefully this video helps, and if it does, make sure y'all subscribe and like for more videos. And also share this with another trading friend. Share this with a trading buddy. Share this with somebody who is asking you these same questions, or share this with somebody who you're going on this journey with. This video is for you guys to be able to come back and click on whenever you have questions like these, and for you to really just understand, because I'm trying to, or my goal is to explain it the best way possible and to explain it in a very simple way so that it clicks in your brain, okay? Starting off strong, a lot of the questions that I get is what prop firm do I use for my funded account? If you haven't been following me for the beginning of my journey, I started with about $100 in my live account. And then after about 2 weeks of trading that, I jumped right into a prop firm. I was like, I'm ready. This is it. It's my time to shine. Cause I'm thinking like, okay, if I'm taking all these winter trades and it's not the money that I'm looking for at this point. But if I'm able to win these trades with a small amount of money, imagine what I could do with a bigger amount of money. So I was like, you know what? I'm in there like swimwear. Okay, I get my funded accounts and to answer the question, I use Top Step X as my funded account. Now back to what I'm saying. Prop firms are, when you talk about prop firms, you have a lot of people that hate it and a lot of people that love it. I am in the middle right now. I'm kind of finding my way, but I love me my live account and I love me my prop firm. I feel like they both teach you two completely different things. I learned my discipline, my consistency, and the rules that I want to follow from prop firms, and that's what they teach you. The whole point of a prop firm, what they're trying to get you to prove is the fact that you can be a consistent, disciplined trader. That's the whole thing with top firms. If you cannot be that, you will not pass because they have way more rules than your live funded account will be. However, you're trading with somebody else's capital. You're not trading with your own money. So yes, you can easily blow that money and get a new one for $50. However, it tarnishes the discipline and it gets you in a habit of just blowing accounts. So you don't want to get in the habit of that, which is why I'm kind of in that phase where I'm like, okay, time to step into my live account more because I'm making these big amounts on my prop firm. Not only have I taught myself that discipline and that consistency, but now I can take these same trades on my live account and make the same money and it actually be mine. So that's kind of where I'm at with it. But I really like Top Step because the 50K accounts are only $50. Now they do have an activation fee as of right now. So once you pass that combine, which is basically the eval that you have to take before you actually get the funded K to trade with. Once you pass that, you have to pay a $150 activation fee to actually have that 50K to trade with. Now the 50K is not yours. Like you can't take out the 50K, but you're trading as if you have that capital. So obviously you can make more, risk more. Now, prop firms will not fix bad discipline, but it's going to show you that you have none. So keep that in mind. Number 2, what broker do you use? I use Henkel Trade. It's not a US broker, so it has different leverage amounts that a lot of people are not aware of. So they go from 1 to 50 to 1 to 500, meaning they give you leverage where you can risk more. It just gives you more wiggle room. It gives you more space to let trades run. It gives you more space to be in the drawdown for a little bit longer until you reverse or flip or whatever. So I like it. And with having that 1 to 500 leverage ratio, I don't use that. I'm on like 1 to 200, but it really just means that you're able to risk more and make more. That's all that means. Like, to be realistic, you're able to risk more and make more. So you can put $50 in there and you can still risk a good hefty amount to make some money. Now it takes longer to get there when you start with such a small amount, but with Henkel Trade, there is no minimum amount that you can deposit. Because there's a lot of brokers that have a minimum amount, or you can only deposit a minimum of $2,000 or whatever in order to trade from it. Henkel is not like that, which is why I like them. I started with $50 and then $100, and I've just been adding up since. The spreads are clean and the execution is fast. I love it. 3, how do you calculate your stop loss and TP? Okay, I'm about to get in the nitty gritty for y'all, okay? Because I'm about to literally show you the formula. One thing I need y'all to remember is that your stop loss goes where the charts say they go, not where you want it to go. So knowing what you're risking on a trade is so important before you get into a trade, because you can't just randomly get into a trade and be like, oh, I only want to risk 200, and then your stop loss is like at the beginning of the zone, not at the end of the zone. You're gonna get stopped out so easily and lose $200 for nothing. Bless me. When you should have just put your stop loss where the market said to put it, outside of that zone, and you wouldn't have even lost. You would have hit TP. And for my TP, I always put it to go to the next clean level. So if a high was made, it came back down, retested my demand, I got in, my TP is going to be where that high is. And if it keeps running, cool. But my TP is for it to hit that high again. TP always goes to the next clean level. Now, I'm going to kind of tie this question into the next one as well when I give you the calculations for your stop losses. So the next question is, what lot size should beginners use? Now, make sure you start small, okay? The whole goal when you start trading is not to instantly start to make profits. And if that's how you're thinking, you will very much learn and be humbled. It's not quick money. That's not the name of the game. So when you're first starting, your whole goal should be to find good setups, not to find profit. Your lot size / contract size, so how much you're putting on a trade, should match your stop loss and your risk percentage that you want on that account. Having a small size helps you control your emotions, which is very important, might I just say. Let me explain this the easiest way I can. This is the way that I wish somebody could have explained it to me instead. I had to use ChatGPT. Before you enter a trade, you're gonna measure your stop loss. So I use TradingView, and the ruler I use is right here. Let's just say this is my zone right here, my demand zone. Like I said, your stop loss always has to go outside of the zone. So this is how much you're risking. You put this on here because let's just say we enter the closest to the zone as possible. Stop loss outside of the zone. Now I use my ruler template right here, and I measure from where I would enter down to my stop loss. That's 66.23 points. That's how much you're risking on this trade. That's how many points that will go against you if the market does go down. Now, how you calculate that. So before you enter a trade, you want to measure your stop loss. For the sake of this video, let's just say your entry to stop loss is 50 points. So this is where you can decide how much money you're actually willing to lose and risk on this account. If you have $100 in your account, but you're only willing to risk 1% of that, then you would be only risking $1 per trade. If you had $1,000 in your account and you were only risking 1%, you'd be risking $10 per trade. Now remember, lot size equals what you're risking divided by stop loss points. So $1 divided by 50 points equals 0.02 lots. So that means if you're in a trade and you place that trade with 0.02 lots and it goes against you, you'll only be losing $1. Nothing more, nothing less. Now let's say you're risking $10 on a 40-point stop loss. Remember, stop loss equals what you risk divided by stop loss points. So $10, what I'm risking, divided by 40, how many points my stop loss is, equals 0.25 lots. So that means you put 0.25 lots on that. And if that trade goes against you, then you lose only $10. So whatever your numbers are when it comes to how many points the stop loss is and what you're willing to risk is going to be able to tell you what that number is of how much you need to put on that contract. And same thing if you were to flip some stuff around. So hopefully that makes sense on how you calculate stop loss. And this calculation works for NAS 100, obviously, because that's what I trade. But it also works for either micros or minis, because you're calculating how much money you're risking based on stop loss distance, not based on contract size. You can use this for NAS 100, US 30, XPX 500, gold, USD pairs, even crypto. Literally anything, just as long as you're measuring your stop loss distance in points or pips. Back to the questions. That was kind of a long explanation. Also, something just to keep in mind, your lot size changes depending on the size of your stop loss. Big stop loss equals small lot size. Small stop loss equals bigger lot size. But make sure your risk always stays the same. So know what percentage that you're willing to risk on your account based off how much money you have in there. Okay, number 6. What do you look for in a strong zone? Like I explained in a couple of videos, a strong zone to me is the most recent place where a big move was made. I'm talking about explosive moves away from a zone and break of structure, really. In a clear break of structure. Number 7, what if price never taps my zone? Then it's a no trade, shawty. When I tell y'all I'm so strict over here about my rules, if the candles don't come back and tap my zone, oh well, we look for a new zone or we wait for a new zone to form. We're not chasing setups, we're not chasing trades, because one thing about it, 2 things for sure, the charts like to play. So they will act like they're coming up and don't come up and tap your zone. And then they'll start to go down and you think, oh, let me hurry up and get into a trade. FOMO, feeling FOMO. And then boom, it goes back up and taps your zone. Now you're in drawdown $7,000. Maybe not. I would hope you're not in drawdown $7,000. But so you just have to wait and be patient. If it does not come back and tap your zone, you either keep waiting or a new setup will present itself. One thing about it, 2 things for sure, the market is going to keep marketing. It's going to keep showing up. Setups are going to keep showing up. So there's no need for you to feel like you're missing out or to hurry up and hop in a trade when you see that it didn't follow one of your rules. Missing a trade is better than forcing one. I need y'all to hear me on this. Number 8, do you avoid news? Yes, yes, yes. I think I've entered on the news trade like one time, never again. I did win the trade. I won 1,500 off of it, but no. Then it can blow. So the thing about news is it can literally blow your account so fast that you don't even see it happening. Not only that, sometimes brokers or prop firms they don't either fill the order fast enough or take you out of the trade fast enough. So you'll end up blowing an account when you had your stop loss set to 600 and now you just blew 2,000. Like news is just crazy. So I highly recommend never trading news. Especially that high impact, like I said, that red folder news. News can be very, very unpredictable. Even if you have everything set up on the chart and it's following all your rules, it can still go the opposite way. So I just sit there and wait for that structure to return. I'm trying to see trends. I'm trying to see confirmation. I don't want no news. Number 9, which session do I recommend trading? Now, a lot of people like me also work a 9 to 5. So when I started trading, I'm not gonna lie, I started getting up at 3 a.m. for London session. I was like, no, we gotta make this work because I wasn't able to. I literally work a 9 to 5. New York session opens at 9:30. I was going to trade by any means. So if I had to wake up at 3 a.m., I had to. So for like a couple months straight, I was waking up at 3 a.m. for London session. I would take a trade then. At that point, I was still kind of flexible on my rules. So it was more like if you win London session, you can still participate in New York session. Just don't force anything. Or if you lose London session, you can still participate in New York session because you lost, but then I end up losing even more. So that's why I had to get to my one trade a day type of situation. I would wake up at 3 a.m. to trade London session and then sometimes participate in New York session, sometimes don't. My biggest recommendation is to trade New York session if you have that availability because it's the session that has the most volume. They just have a lot of more momentum behind it. If the charts is going down, the sellers are just going to have more momentum during that New York session. If the charts is going up, the buyers are going to have more momentum during that New York session. So I love me a good New York session, but however, if you're like me and you weren't able to trade during that 9 to 5 London session, it is a bit slower, but honestly for new beginners, I highly recommend it because it gets you more comfortable with the charts for real since it's moving at a slower pace than New York session does. Now I do not trade London session no more. I only trade New York session, and that's literally just to minimize my losses because I just realized I was giving myself too many opportunities to lose. Yes, it's also giving myself opportunities to win as well, but I was losing way more. So I just decided to stick to one session. I do still trade while I'm at work. I just trade on my phone. A lot of people say it's hard to do that, but it's easy for me. It's not really hard. So do with that as you please, but yeah, just trade whenever you have availability to look at your charts. Sometimes though, I'm not even gonna lie, y'all, sometimes it's good to be able to not look at your charts when you're placing a trade. All you need to do is set that TP and set that stop loss and walk away, because that's how a lot of people end up doing things out of fear when they're just staring at the chart. So it's really not a bad idea to just set your TP, set your stop loss, trust your setup. Either it's gonna hit or it's not, because we're in a probabilities game, so it could possibly not hit, but trust that your setup is put in play so that if it does hit, you participated in that. You got a piece of that pie. Trust your setup and walk away. Question number 10. Do you execute your trades on TradingView? No, I only chart on TradingView. That's all I use TradingView for. I use the measurement tools. I use the boxes to box up my zone. And I use the green and red thing to set my TP and stop loss. Other than that though, no, I do not trade on there. There are some brokers that you can connect to it. Hanko Trade is not one of them, or Top Step X, what I use for funded, is not one of them that you can connect. But there are some brokers that you can connect and you can execute the trade on TradingView. I just don't have one of those, and I prefer it that way. I kind of like having my different sets of charts to look at. Question 11. How much did you start with? I kind of touched on this earlier, but I started with $100 in my personal account. I said I had put 50 in there, but I wasn't really trading with that 50. So I started with $100. I built that up to like 120, 130, not gonna lie. Like I said, the less you start with, the less you can risk during the trade. It's also the less you can make during the trade. So I was winning these trades for like 30 cents, 10 cents, 20 cents. So that was actually a good build up to 120, 130, you know, because of how I was trading it with only winning with cents for real. But I started small, and then I felt like I was good enough to go to a comp or to a funded account. I did paper trade before that though. I paper traded before I put that $100 in there, and then I started with the $100. I paper traded for like 2 weeks, and then I traded with the 100 for like 2 weeks. And then I went straight to a funded. Now that's just me personally. I don't recommend that. I recommend trading with a smaller amount for a longer amount of time. But That's just how I did it. These are the questions that I wanted to add because I too had these questions when I was a beginner. Question 12, what's the difference between retracement and a reversal? A retracement is just a temporary pullback, and you can use higher time frames to confirm that. But it's literally just, say the market's going down but it starts to come up and break a couple supplies. That could literally just be a deep retracement and for it to just come back down and continue to go the way it was going. Now, a reversal is when it completely changes the trend. So it's going down and now it's going up. It's making higher highs. It's breaking structure. Like it just going up. Those are the two differences. Number 13, how do I stop overtrading? Overtrading is like a drug, okay? And it's like an addiction. You gotta stop. You gotta have rules and stick to these rules. How you stop overtrading is you tell yourself you're only gonna take 1 to 2 trades max a day, okay? And when you're beginning, 1 to 3 trades a week. You don't need to trade every day. Once you get your mind into the routine of not having to trade every day, that's when the overtrading will stop. Also, fixing greed and FOMO and all that. Once you hit your limit of that 1 to 2 trades a day, whether they're a loss or a win, you close the computer, you walk away. You have to create that discipline and create that routine in your mind that I'm trusting what I say and I'm following my rules. That'll help you a lot. I told you I just went from trading 2 different sessions to only trading 1 session. Like, I had that problem too. Number 14, how do I stop FOMO? If you don't know what FOMO is, it's fear of missing out. A lot of us traders have this problem and we don't realize it until we've blown some accounts and we know we shouldn't have took that trade and we only got in it because we was fearing that it was gonna take off without us, or it didn't come back and tap my zone, but it was so close, and it started to go down, so I wanted to jump in. Now I lost the trade because it pulled back and I didn't have enough risk. I didn't have enough room for this trade to pull back. I didn't have enough money in my account to risk this trade pulling back. FOMO is literally thinking that you'll miss money. Mind you, how long have the markets been open, been a thing? I don't know, but long enough for a whole bunch of people to become millionaires and billionaires from trading. Baby, the charts is always going to be there. The market's always going to be there. It's always going to present opportunities for you to make money. There's always going to be setups to trade. Stop feeling like you're missing out. And honestly, if you're anything like me, if you missed out on anything, it was not for you. It wasn't meant to be. The market literally moves every day. Well, except for Saturdays. So missing a trade isn't losing. If anything, it's better to miss out on a trade than it is to get in one. Like, it's so crazy. Number 15, how long did it take you to get consistent? I wouldn't really say it took me, I don't really know how long it took me, but I know it took me multiple blown accounts. I'll tell you that. Consistency came when I stopped chasing control and when I stopped chasing wins. And I started to really focus on my rules and just taking good quality setups rather than thinking about profit. That's when consistency came. And I can say that because when I got my payout, I got my payout because I didn't look at my P&L calendar for a whole week. And then I realized, whoa, I've been so focused on trades and the setups that I haven't even realized that I qualify for a payout. You need 5 days of making 150 on Top Step at minimum to get a payout. I had 7 days of making more than 150 and I didn't even realize that. I was overly prepared. I was overly qualified. So that's why I say when you stop chasing wins, when you stop chasing profits and you start to chase, you following your rules, you start to chase discipline, you start to chase quality setups, not even chase, but when you start to put your mind on those things instead of profitability, that's when you'll become consistent. Question 16, what's a realistic daily goal? Not money. I'll tell you that. You should not have no dollar goals. Because I tell y'all this based off experience, I swear. I literally was going on a trip and I had just got my first or second funded account, something like that. And I was like, you know what? Let's put a goal on it. Let's try to make this amount of money so that I can spend this on my trip instead of my money. Lost my account just like that. When you start to focus on the money and your goal is to make a certain amount of money, that's when you will start to lose, because when you're thinking about all this money, that's when greed starts to come in, over trading, not following your rules. That's when your psychology and your discipline is just like lack thereof, because you're worried about the wrong things. Your goals should only be about your setups, what you're looking for, you following your rules, you staying disciplined, That should be your goals. Don't chase the money, chase the discipline. And once you chase the discipline, the money will just be chasing you. Question 17, how do I know trend direction? Kind of like I explained in my simple supply and demand video. Higher highs, uptrend. Lower lows, downtrend. If you see that the market is going up and it's consistently breaking structure and making higher highs, we're going up. If you see that the market is going down and we're consistently breaking lower lows, we're going down. Keep it simple. Don't overcomplicate it. Question 18. What's the number one mistake beginner traders make? And really, learning entries before learning risk. Risk management is the real strategy. You should always know how much you are going to risk before you enter a trade. Like, number one thing, a lot of the times I used to hop into trades and be like, whoa, when I set my stop loss outside of the zone, which is where it should go, my risk is way more than I needed it to be, like blown account way more than I needed it to be. So now I'm calculating all that before I even get into a trade to let me know, like, is this trade even worth it, for one? And what am I going to risk on this trade, for two, if I do enter? Because just how we calculated lot sizes, you're going to know what you need to put on that trade in order for you to only be risking what you can risk on that account. Yeah. I hope this video helped and answered a lot of questions. It was kind of random. There was like some chart stuff, some psychology stuff, you know. I had a whole mix of different questions and stuff that I wanted to ask. So I hope this was helpful to y'all, for real, for real. Let me know in the comments. Make sure y'all subscribe to your girl, and just one day at a time. One day at a time. We got this. If y'all want a part 2 Q&A, let me know. Put some questions down in the comments. I got y'all. And I can answer them in my next video or videos that come. I'm kind of just winging it. Y'all, we reached 1,000 subscribers on here. Let's go. Yes. Thank y'all so much for joining and watching this journey. I hope that I can teach y'all so much, for real, because I'm still learning. So it's kind of y'all just learning with me, you know? On this channel, we're learning trading the real way. I'm not just talking about wins, and I'm not just talking about L's and wins. We're getting to the nitty gritty and what's going to make us a profitable trader, which is the discipline, the psychology, the consistency, the clarity, the patience. We're learning to trade the real way. So I really hope y'all enjoyed this video. Again, make sure y'all subscribe, like, and follow my Instagram, my TikTok. My links are going to be in the description for those. Thank y'all so much for tuning in, and I'll see y'all next time. Bye.